Everyone, this is Professor MoneyPigTrading. Today, August 21st, 2021, we're going to talk about the shipping stock ZIM Integrated Shipping Services. It's an Israeli shipping company, whether it's a buying opportunity or not. Let's discuss about it. And also, really quick disclaimer, we're not a financial advisor. Please invest at your own risks. And currently, for some disclaimer, we're loaning ZIM's stocks, and also we have some loan call options as well on ZIM. And if you haven't liked this video, make sure to like it. That will help our YouTube channel tremendously. We also have a Discord community, www.moneypigtrading.com. Feel free to check it out. We also have Twitter, YouTube, and Instagram, all MoneyPigTrading. Feel free to subscribe and follow us to get the latest investment education contents. So ZIM actually just reported amazing quarterly financial reports a few days ago. Let's take a look at their net income in $1 million on the y-axis on the chart on the left side. Axis is the year 2018 to 2021. Their net income is growing exponentially. 18 and 19, they lost money. Starting from 2020, because of the shipping crisis and the elevated shipping costs, they started turning into a very profitable company. In 2020, they actually made $524 million of net income. 2021 so far, the first half of the year, they reported about $1,100 million net income. However, here we just multiply by 2 because based on their guidance, they believe the next 2 quarters were even better than the first half of the 2021. So if we just simply use a more conservative approach than their guidance, we multiply by their net income so far in 2021 by 2. And then that's what we got with this $2,366 million of net income. And even just by cutting it in half, it's still exponential growth based on the current trajectory, which is still very amazing. Correspondingly, if we're looking at the earning per share, which is pretty much a net income divided by the total number of shares. Again, losing money in 2018 and 19, starting with 2020 become very positive, and potentially this year their EPS will become $26 per share, assuming they can continue this great net income growth. One thing to be aware of is 2018 to 2020, based on their annual report, those accounting numbers are audited, those financial numbers. However, so far the first 2 quarters that they have reported, those numbers are not audited. So definitely some risk here on the accounting side that you should be aware of. But however, based on their amazing 2020 results that have been independently audited by KPMG, I do think the 2021 numbers should be trustworthy, but just some risks that you should be aware of. And also, the other thing we think, not only ZIM, but also DAC, NMM, and other shipping stocks, they're all doing great because shipping demand continues to be strong. This number we're pulling it from the U.S. Census Bureau. And you can see this is the retailers' inventory to the sale ratios. The higher the number means, that means more retail sellers, they have more inventories. And you can see we highlighted here in the gray area, that's after each financial crisis, the inventory number will start to drop and slowly coming back up. Right now after COVID, because all the crises you probably have witnessed in the past few months or one-ish year, the inventory for retailers are dropping all-time low, and we're seeing this in many shipping chip shortage, right? And that's why a lot of automakers don't even have a car to sell. If you go to Ford, Tesla, everybody, they're all telling you they don't have a new car to sell. And that's the reason. And because of this very high inventory to sales ratio, the shipping demand will continue to be strong because now all these retailers, they need to start to order goods and, in order to continue to make their products. And also, I believe this inventory to sale ratio will surge pretty quickly this time. Because like automaker, for example, now they learned the lesson not to keep chips in inventory. Now I believe they'll start to do that once the chip shortage start to ease. And later this year or sometime next year. So the shipping demand is definitely still going to be strong here. And also if we look at the shipping cost here, it's continue to be elevated. You can see this chart on the y-axis, the shipping cost, the x-axis is the year, and continue to skyrocket. And right now, while we're talking, it's actually right now the historical number of cargo ships are waiting out outside of the ports worldwide. And the shipping price actually continues to grow, and so does the shipping price. And if the cargo ship price continue to go up, it's actually going to boost the net income and revenues and earning per share for all the shipping stocks, not only for ZIM, but many other amazing shipping stocks as well. The other thing in the quarterly report that ZIM actually reported is they confirm that they will continue project to put 30% to 50% of the 2021 net income distributed to some special dividends in early 2022. If that happens, based on the current projection of the net income, that translates into 3.72 per share to $7.4 per share for dividends in early 2022. And consider ZIM is actually traded around $46. If they can really contribute about $7 of special dividends, that's translate into like what percent? 17% of the dividends rate. That's really amazing. And also, they also have a special dividends, $2 per share, going to be ex-dividend date on August 25th, 2021, which is pretty upcoming next week. So let's take a look at ZIM daily chart on the left side, weekly chart on the right side. You can see since they IPO again, they actually bankrupt a few years ago, 2014, when the shipping industry was in really rough shape. And now they come back with excellent financial numbers. January this year, the IPO at around $16, I recall, pulled back at a low $11, and then just one line up, and then pull back because all the shipping companies actually pull back a little bit at the same time. And also for ZIM is a little bit of special cases because they actually have a lockup period expiration around the end of July. And so we make several videos about Snowflake and many other lockup period expiration. And if you're interested, the video will be on the upper right corner. But basically 3 weeks ahead of the lockup period expiration, the stock price usually tank, and that's why ZIM actually tanked quite a bit, all the way back to about $35. And we actually waited for quite a while, and now the stock price started stabilizing and together with the whole U.S. stock market, and and now started to push back up. And now we're looking at this typical cup and handle chart pattern, which we'll explain a little later. And usually in that case, we'll pull back a little bit, especially consider there's special dividends coming up in the next week. So usually after the dividend date, you can see some investors started to de-risk themselves, taking profits. So not very surprised if you started seeing ZIM dip back a little bit down to maybe $40 or $30-ish, and definitely still look very attractive here. On a weekly chart right now, still look very bullish. 4-day, 8-day EMA cross, holding most of the EMA supports, but against a cup and handle chart. Let's take a look. If you're not familiar with the cup and handle pattern, this is a cup. And usually once the cup is formed, handle will usually sink the ZIM stock a little bit or any other stocks, and usually will make a breakout and push to the upside. Especially consider how amazing the financial number is. I won't be surprised if ZIM can continue to push up after a little pullback after the ex-dividends. So there are definitely some risks on the ZIM. Let's take a look. So as you're probably aware of, the shipping supply and demand will definitely affect this ZIM. If the supply and demand pattern change, right, the shipping price will drop, and that will erode the ZIM's profits and the margin in terms of EPS. And also ZIM actually is a shipping charter company. They strategically only own one cargo ship. So that means they rent all and contract out all the shipping cargoes. So there's a possibility that they won't be able to get any shipping chartering. So that means they cannot provide their service, and that will cut their revenue stream, right? Also, the world economy and geopolitical trends continue to trend. Afghanistan just got occupied by the Taliban again. Also, the U.S. and the China trade tension might elevate again anytime soon, especially consider the Biden COVID-19 origin reports probably going to come out at the end of August. Also, currency exchange. Consider the Federal Reserve now possibly going to taper the end of this year or sometime next year. The U.S. dollar will start to surge, and the money will come back to the U.S. dollar again. And also the energy price, if the COVID start to come down, right, the energy cost, the oil price might start to shoot up. That can also elevate the ZIM, their shipping costs as well. Also, of course, weather can be a risk for any shipping company. COVID-19 is still really a wild card here. Whether the Delta variants or any other variants will cause any wave of COVID, that's also a big question mark for everyone right now. For infrastructure reports, whether those infrastructure will be changed and causing the shipping congestion be worse or less, that can drastically affect the shipping costs as well. Another mention is a really competitive industry in the shipping industry. So any competitors coming out, erode the margins, that's also possible. And we mentioned there's a possible massive dividends early next year. That will actually be a very, very bullish catalyst. However, if that special dividends is missing for some reason, we can see the stock price continue will start to pull back. And that's definitely a potential reason. And also accounting, we kind of mentioned, we'll mention more details. That's definitely another risk. I want to cover about the shipping chartering a little bit more. The reason this company can have such amazing margin is because of the ship chartering, right? It actually rents all the boats, and then that's why they only own one cargo ship. They want to use this low cost model by renting all the cargo ships to control their margins and costs. And if the economy downturn starts again for XYZ reasons, they can just quickly cut down the number of ships they actually rent, and that can lower the cost quite a bit instead of just owning those super expensive cargo ships and then massive debts on their balance sheet. So it's actually really a good side for this ZIM stock. But on the other hand, there's a risk of what if they cannot get shipped to chartering. But so far, the management are doing a really good job to secure all those contracts. So I still think it's a positive thing for the company, but definitely a risk I just want to mention and highlight. One thing, kind of slight risk on the analyst rating right now is really no Wall Street analyst coverage. You might see some Citigroup, Jefferies, Clarkson, Barclays, and Goldman actually cover them. But if you look at the F1 form of a ZIM file to US SEC, all these investment banks, they are actually either the underwriters or the book runners for their IPO. So it's kind of like covering themselves. So not really reliable data here, based on my humble opinion. So that's the other kind of like yellow light, I would say. Not necessarily a huge risk, but something you should be aware of if you're looking at those analyst rating. Not saying they're not reliable, just a little bit of a conflict of interest in my humble opinion. The other thing about Auditor is it's actually audited by a KPMG firm in Israel. I don't know how to pronounce it. Let's just say SC. And this SC actually audited quite a bit of Israeli companies, from some pharmaceutical name ANCN, and also some technology name like MySize, Nano Dimension, which is a manufacturer industrial name, Silicon, and also help auditing a Vanguard ETF. So definitely not it's definitely a mature accounting auditing firm, I would say. It's also one of the big four partner, KPMG. So I think it's relatively reliable, and don't see any red flags or accounting errors in any of those firms that they covered before. So definitely a good thing. However, we just mentioned before, the quarterly earnings are not audited. If you look at their F6 form reported every quarter, only the annual report released every March and the F1 form are properly audited. So if you are making an investment decision based on the quarterly earnings reported every quarter, might be a slight risk that, like next year, March, they'll say, hey, the quarterly report that we reported in 2021, there's some errors. And if the errors are pretty big enough, significant, you can see the stock price could drop quite a bit. If you're looking at the Plug Power, PLUG as an example, the accounting error actually make the stock price drop more than 50%. However, like we mentioned at the beginning of the video, we don't think that will be the case because the 2020 number ZIM reported was actually pretty decent, and actually does fit into the revenue and growth trajectory that they reported in the 2021 quarterly earnings so far. So, and just want to highlight, we actually have a swing trading program. 1 month, one member joined. After 1 month, his account actually grew 540%, from the $2,000 to $12,000. It's pretty decent. We also have a very robust long-term investment program. Average return per trade so far this year is 20%, and the winning rate is almost 75%. So if you're interested in our Discord community, feel free to check out www.moneypigtrading.com, Twitter, YouTube, Instagram, again, all MoneyPigTrading. Feel free to follow and subscribe. And thank you for watching this longer video about this amazing stock. And feel free to reach out in YouTube or any other social media. Thanks for watching, and don't forget to like this video. See you guys in the next video. Bye-bye.